What if the ringgit became one of Asia's strongest currencies, but Malaysians still chose to cross the causeway for work? What would that say about the real reasons behind Malaysia's decades-long brain drain to Singapore? And more importantly, if the ringgit keeps rising, will it ever be enough to bring its people home? It sounds dramatic, maybe even puzzling, but this is the reality Malaysia faces today. The ringgit is strengthening, investor sentiment has improved, and new economic zones are being built. Yet one trend remains stubbornly unchanged. Malaysians, many of them talented, educated, and highly skilled, continue leaving for Singapore. And even government scholars sent abroad to study with taxpayer money, with guaranteed public sector jobs waiting for them, are deliberately choosing not to return. In this video, we explore why a stronger currency cannot solve one of Malaysia's deepest structural challenges, and why Singapore remains an irresistible magnet for Malaysian talent, even when the exchange rate begins to move in Malaysia's favour. So, the big question is this: even if the ringgit strengthens, will it stop Malaysians from heading to Singapore, or persuade those already abroad to come home? To understand the answer, we need to look far beyond the exchange rate. Because as the evidence shows, currency strength is only the surface-level story. The deeper reasons driving Malaysians south and keeping them there are far more complex, far more entrenched, and far more troubling for Malaysia's long-term future. Let's start with the ringgit itself. In 2025, the currency did something few people expected. It surged. It wasn't a minor appreciation. It became Asia's top-performing currency. Analysts credited it to a cocktail of favorable global and domestic factors: stronger exports, renewed investor interest, steadier fiscal management, and a friendlier climate for foreign investments under the Anwar administration. Bond markets saw billions in inflows. The government narrowed its deficit significantly. Subsidy reforms, controversial as they may be, bolstered financial confidence. And the improving US-China relations gave Malaysia's export-driven economy a timely lift. At the time when this video was published, the ringgit hovered around 320 against the Singapore dollar, much stronger than the 350 lows witnessed in 2024. To many Malaysians working in Singapore, this meant one thing: their remittances shrank. A $2,000 remittance that used to bring home nearly 7,000 ringgit now delivered several hundred ringgit less. Some grumbled, some felt the sting, but almost none decided to quit their jobs and return home. In fact, many called the new exchange rate still adequate. For them, anything above 3 ringgit to 1 Singapore dollar remains incredibly favourable by historical standards. Most remember the days when the exchange rate was closer to 250. So to them, grumbling aside, this wasn't a real loss. It was a minor adjustment. But even if the exchange rate dropped below 3, even if Malaysia managed to restore a level unseen in decades, it still wouldn't be enough to draw Malaysians who work abroad home, or stop others from heading to Singapore for work. The evidence makes this clear. The core of Malaysia's brain drain problem has never been the ringgit. The exchange rate only highlights a much deeper, long-standing set of issues. Let's talk about scale. Official data tells us that around 1.8 million Malaysians now work or live abroad. That's a staggering 5.5% of the entire working population, higher than the global average. And among this group, the greatest share, by far, has chosen Singapore. Over 1.1 million Malaysians now call Singapore home. That's more than 60% of Malaysia's entire diaspora. And the flow is not slowing down. In fact, the latest data reveals something even more alarming. Since 2010, Malaysia has spent billions sending its top students overseas under government scholarships. These scholarships are not gifts. They come with a binding requirement. Upon graduation, scholars must return and serve in Malaysia's public sector. But according to data released by Malaysia's Public Service Department in April 2025, 16% of these sponsored students have chosen to break their contracts and repay their scholarships instead. That's around 2,800 top scholars who consciously decided that coming back wasn't worth it. Think about that for a moment. These are students who received full funding, career placement, and stable public sector jobs guaranteed for them. Their entire pathway home was paved. And yet, they looked at Malaysia's opportunities, compared them to what they could get abroad, such as those in Singapore, and decided it was better to pay back hefty sums than build their future in Malaysia. Some former scholars even say that advice on how to handle scholarship obligations is often shared informally among scholarship holders. These peer-to-peer tips typically focus on how to navigate repayment rules and the options available for those who choose not to return to Malaysia after graduating. Whether one views this as a practical choice or a troubling sign of disconnection, the underlying message remains clear. For many, the opportunity cost of returning home feels simply too high. So what exactly are these opportunities abroad that Malaysia is losing out to? The clearest answer is wages. This is the simplest, most measurable, and most cited reason behind Malaysia's brain drain. Salaries in Singapore don't just edge ahead of Malaysia, they tower over them. Take a young graduate. In Johor, a fresh business graduate might start with around 1,500 ringgit a month. The same graduate can walk into Singapore and, with little experience, take home 2,000 Singapore dollars. That's more than 4 times higher. Even when the ringgit strengthens, the difference is massive. Or take a software engineer. In Kulai, they might earn around 8,000 ringgit. A similar role could offer over 6,000 Singapore dollars, easily more than double. Multiply those earnings across a decade and the difference becomes life-changing. But wages are just the first chapter. The next has to do with something every young worker craves: career mobility. Malaysia's economy, despite its strengths, still struggles to create enough high-skilled jobs that match the ambitions of its graduates. The country produces about 300,000 graduates every year. Yet more than a third of them end up in jobs that don't require their qualifications. This underemployment is a silent crisis. It doesn't show up dramatically in unemployment rates, which sit comfortably at around 3%, but it erodes motivation, wages, and long-term potential. A medical graduate in Malaysia, for example, might spend years stuck in contract positions with no guarantee of permanent placement. They face limited specialist training slots, heavy workloads, and uncertain futures. It's no wonder that at top Malaysian institutions, such as University Malaya, many of the best medical graduates leave for Singapore each year. In Singapore, they find structured training, better pay, clear pathways to specialization, and a work environment that invests in their skills. Nurses follow a similar path, with thousands leaving for Australia, Singapore, and the UK. Engineers, finance professionals, IT specialists, they all see the same pattern: better training, clearer progression, more predictable growth. And beneath all this lies something harder to measure, but felt deeply across generations: the desire for meritocracy. This brings us to a sensitive topic: Malaysia's affirmative action policies. Introduced in 1971, the Bumi Putera policy aimed to uplift the Malay majority and prevent the economic disparities that had once divided the nation. Many argue it helped create a stronger Malay middle class. Others believe it entrenched inequality by concentrating benefits among elites. Former Prime Minister Mahathir Mohamad, who oversaw and defended the policy during his tenure, has dismissed the idea that it played a major role in driving talent away. Yet demographic trends tell a different story. Around 60% of Malaysians in Singapore today are from ethnic Chinese and Indian communities. Many of them left not only for higher wages, but because they grew up in an education system where university admission quotas, scholarship preferences, and public sector opportunities offered them fewer chances to excel compared to their Malay peers. These students often found themselves hitting ceilings not because they lacked ability, but because the system wasn't built to support them equally. This is why so many Malaysian students pursue education in Singapore. The moment they win scholarships into Singapore's system, a system built aggressively on merit, they often don't look back. They build careers, find opportunities, and start families there. And the proximity between the two countries makes staying in Singapore even easier. Malaysians can still visit home frequently. They can maintain emotional ties, cultural ties, and familial ties without feeling cut off from their roots. So what incentive is strong enough to pull them back to Malaysia? Certainly not the exchange rate. Let's not forget another factor, the rising cost of living in Johor. Many people assume that Johor, being right next to Singapore, would offer an affordable alternative. But Johor's inflation is among the highest in Malaysia. Eating out can be surprisingly expensive. Salaries remain low, yet expenses, from food to rent to basic necessities, have climbed steadily. Even Malaysians earning Singapore salaries but living in Johor see their savings eroded by rising costs. If Johor itself is expensive, then what incentive is there for Malaysians to leave Singapore's job market and return? Malaysia's government is trying to change this. Initiatives like the Johor-Singapore Special Economic Zone and the Special Financial Zone in Forest City hope to raise wages and bring in global players like Nvidia and Microsoft. The vision is promising. High-value industries, data centers, fintech hubs, and AI-driven jobs. If salaries within the Special Economic Zone could reach as high as 5,000 to 7,000 ringgit, it might narrow the gap, but it won't eliminate it. These wages are still far below what Singapore offers. And here's the truth that many experts repeat. Brain drain is not driven by temporary gains or short-term improvements. It is driven by long-term confidence, or the lack of it. Confidence in wages, confidence in growth, confidence in governance, confidence that hard work will be rewarded, and that opportunities will not favour certain groups over others. This is why the government's hope of persuading Malaysians abroad to return is so difficult. Even Prime Minister Anwar Ibrahim has acknowledged the severity of the issue. He has spoken about the need for a more effective system, one that offers the right incentives, the right opportunities, and the right environment to attract top talent back home. But the challenge goes beyond incentives. It requires systemic reforms that Malaysia has struggled to implement consistently. Policies change with every government. Education switches between English medium and Malay medium instruction, depending on political winds. Economic policies shift directions, and young Malaysians feel these disruptions acutely. In contrast, Singapore's policies, regardless of political debates, maintain long-term consistency. This consistency builds trust, and trust is a currency far more powerful than the exchange rate. So why won't a stronger ringgit stop Malaysia's brain drain to Singapore? Because the migration is not fundamentally about currency strength. It has always been about opportunity. The underlying issues are structural. Until Malaysia builds a labour market that truly rewards talent, an education system that is inclusive, and a political environment that offers consistency and confidence, the ringgit can climb as high as it wants. Malaysians will still look across the causeway and see a future that seems clearer, fairer, and ultimately brighter. Even as Malaysian talent continues to leave, the government is exploring new cross-border measures with Singapore, initiatives that could make commuting far easier for Malaysians working there. But what exactly are these proposals? And will Singapore actually agree to them? The answers may be more surprising than you think. Watch this video to find out.